4-hour SPX, yeah, sure, lots of divergence. Price action above a 50 simple, self above 200 period moving average. That'd be back towards a gap. Bad murder on the charts. Will price action go there? VIX suggests there's been increasing volatility in the short term, but overall that's part of a downward sloping resistance line. Lower volatility is the trend since those massive peaks. The de minimis exemptions coming for imports. Rocky's been covering that deeply. I think that's going to affect SPY. Some point you'll see this retraction back down. Test topside of that 200 period moving average and that 236. Very big implications for LivePerson. Starting here on the 4-hour time frame. Last we talked about these gaps. There was one to the top side. It's been filled more or less. You had this below also filled. The 80 cents was the target. 81 was the level in price. So very good targeting there. Very safe. And then the candles closing back above a 236 and back above that 200 period moving average, self below a 50 simple. So price action has gone through the motions up to the top side and is again left with a touch of divergence across those peaks, building momentum. Go up to the daily time frame, you can see a rejection so far of the golden cross with a 50 simple heading through 200 period moving average, but that's because you would normally expect a test of that area for a significant break to the top side. Any sort of a golden cross without a test typically is a little muted. And if you wanted to see price action go up and test this trend line that's been put in with regards to resistance back towards the $3 level, then that sort of a range would be expressed from a breakout from a golden cross. Very potentially possible there. You've also got a breakout in volatility at the minute and a question mark with regards to accumulation. Is this a real trend line yet? Not technically, but it does hint at something interesting when we consider the divergences. If you go up to the weekly time frame, you can see you've been in this tightening range since the lows. Price action there, test of 236 would be very significant, around 149 at this stage. Putting in a higher high on this formation would be that expansion we talked about. Recent lows there all matched within this expanding level of price. Testing slower here would give a degree of equilibrium within the formation, bring it back into a channel, and then emphasize these Fibonacci levels. I'd be looking at the 1.49 as resistance temporarily, but breaker moves long term, and recovering holding that 50 simple period on the weekly time frame would be a really strong signal as it breaks a downward sloping resistance. The moving time, price action just about to lose its own moving average, but still in it around the center line there on the RSI. So could price action return to these topside levels? Well, there's a lot of different people with a lot of different views, and the technicals are in balance as you'd expect at a point of resistance. 15-minute time frame with the 50 simple period moving average as resistance and the 200 period moving average back around $1 and a 618 suggests we could see a little bit of fluctuation between those levels. 80 cents still where we saw the most recent test in that area and the long-term target, and we'd use those levels to manage risk, which is more complicated than just chasing stories. You know, that's not how really we do things on the Tradespotting and Rocky Outcrop communities. It's more about data points and technical analysis. So let's clear the smoke from the room there and talk about the reverse split, which is part of a debt for equity deal. The sort of splitty words that send shivers down the spines of nervous traders, those who do live by the stories and forget the data. Now, it can feel like you're a serious trader when you talk about reverse splits and market dynamics, but often amateurs will see that as shadows on the walls and mistake it for monsters. We're not chasing the stories, we're writing them. We're the technicians, we're the tacticians, we're the people building positions. We're working with facts, with price, and with action. So nothing in the market is inherently bad, and splits likewise. Every move, every restructuring, and every different instrument is just another data point. Question isn't whether it feels good or bad when you hear the news, but how it changes the balance sheet, the runway, or the risk profile of the company and your trade. There's been loads of significant splits. Citigroup after the 2008 crisis, huge splits. Pinterest before they even went public, really interesting change in the way they managed their share price for institutional interest. Or very recently, Atos, European IT giant, massive reverse split, 10,001. And it's all to reflect a change in the capital base, not because the company's dying, but because it's reshaping itself. And those are just off the top of my head. There's a lot of different just things we've covered on this channel. Huge trading opportunities because of the technical opportunities opened up by a split. They're not fairy tales. And this is a reminder, tools are just tools. Hammer can build a house or smash a greenhouse. Depends on the hands that wield it and their motivation and experience and their discipline. Let's be honest. Now, you want to ask Rocky on Wednesday what he's been building, and maybe show you he'll show you what he's been up to with his hands. But talk about your hands and the work we've been doing. Lpsn has reduced the debt there in that debt for equity deal, reduced the debt by hundreds of millions. It's pushed the maturities to 2029. And sure, it took a little bit of dilution. I say a little bit, I mean a lot. But that was the cost of survival. It's not collapse, it's just the conservation of oxygen, which is important at these depths. They've bought themselves time, time, the most precious currency of all in business. How do we as traders approach it? Not with fear, obviously, not with envy, not with hate or toxicity, but we approach trading with method. Buy the lows. It's when we step in, when panic already prices in disaster, but that disaster hasn't yet happened. Understand? You scale with patience so you don't do it all at once. Right? Like climbing a ladder, for example, averaging. And you don't do averaging with emotions, right? That's never going to blend. Manage the trade when prices reach higher levels. Perhaps you want to change the way you manage risk as price strengthens. And maybe that'll help you reduce your cost basis. Maybe it helps you lock in some certainty while you're still looking for that upside. And then a lot of traders here, because they're building, they look to establish a foundation with their position, which isn't touched by any of the noise on subreddits, and allows them to ride the recovery in prices should their analysis be correct. And if the risk management is in place, then what's to lose, right? So obey the stops, obey the rules. And if you want a good trading rules to reduce your unforced errors, join Discord. It's free. This is not gambling, right? Like that Discord, like this community. It's not just hope we're building, it's architecture. That's the heart of it, the mission. The mission isn't simply to, you know, show off or win applause from strangers, certainly not from people who don't understand the true cost of risk. The mission is to trade with integrity and execute your process to follow the system. Winning is good. Highs, absolutely brilliant. But when you look back, and I can tell you this from experience, years from a successful trade, it's not the trophy that you remember, it's the hours you spent in the trenches, the late nights, the charts glowing, when your eyes were drooping, the discipline of sticking to the method even when you're tired, even when you're emotional, when everybody else is completely losing the plot. That's the pride. That's the real reward when you can achieve that level of satisfaction from your own self reflection. And this is an opportunity that was being built for you by my brother and I together, and those brilliant minds on the Discord. We've forged methods into successful outcomes. And it doesn't work for imitators, all those pretenders who think they can copy what cannot be copied, what can be understood. when I can't even reveal it on the internet, these people who believe that they can say, well, Lpsn this and I spotted whatever, and really you didn't. You watched Tradespotting and you were part of a brilliant team. Whether or not you engage directly is only to your own cost and benefit. We are unique. We have lived it. We tested this. We made sure it was proven across time. Our history is written in our work. We've been here and done this with different charts because we understood fundamentals about the business and its position in the market that others don't. And because we're able to combine all those different tacit data points, we're able to write more history and more success. So together, we can be stronger and better the next time. And that togetherness is what takes us the very, very biggest steps. I'm not getting distracted by the fear or the glamour or the way we'd like to see ourselves. Instead, we're focusing on doing the job right. The job itself different from the mission. We use the methods that got us here. We're not spectators. You're the builders and the work. This is the architecture of a different type of trader. And a split, it's not the end. It might be an opening for new traders who are aware of the potential in the market dynamics. The debt exchange was never any sort of a surrender. That's survival. And everybody knows survival. That's where you get started when you're looking for great success. Stay disciplined, keep surviving, stay focused. Because this is the work. Hit the like button, support the show, join the discord.gg/rockyoutcrop.